Yeah, we're going to the next session, and we started with a bang. We are continuing with another banger. And this next session, we are going to be focusing on international expansion. So now we've heard about expanding in the African market, which was really insightful, by the way. Kudos to Gabriel. Some of the fintechs that we're working for, we have our eyes on the global space. We don't want to play small. I mean, forgive me, Africa is not small, but you get what I mean. So we're going to be looking at how to tackle expansion on the global lens. And no other person is best to take us through that than Joy David. So can we give an applause for Joy? Let me see. I want the energy, guys. Please give me. All right. So Joy, just a little introduction. Joy is a product manager. She leads and oversees international expansion for a global fintech company. Just leave it as that. And Joy will be taking us through. Aside from that, by the way, Joy is an expert wealth management, creator. She does all things wealth, finance. If you want to level up your finance, just go and search wealth from scratch on Instagram. Don't say I did not tell you. And many other things. Just when you follow her, you get to know, yes, the DMJ, and she's going to talk to us today. I hope that you are ready. We're going to have a general Q&A after this session. So please stay till the end and let's learn together. So I'll be passing the mic to Joy. Let's go.
Elizabeth, are you sure you've not hyped me too much like this? Okay, let me share my screen. Okay, perfect. So like Elizabeth has just said, I'll be talking about from Africa to the world and what expanding globally actually takes. So for a bit of intro, hi, I'm Joy. I work in products and international expansion. I've helped fintech scale across markets like Italy, Spain, and Ireland. And more recently, I helped fintech scale into Latin America. So markets like Brazil, Peru, and some Asian markets as well, like India and Pakistan. So over the last few years, I've seen what it really takes to expand beyond your home markets, and not just in theory, but from the actual trenches. And today I'll be sharing what I have seen that actually works, what doesn't, and how African companies can prepare before going global. And if you think about it, even before I moved to the UK and before I started doing international expansion, something that I've always thought about is a lot of the products that we use in Nigeria and Africa at large are products that weren't built there. Like when you think about our Uber, or when you think about the social media apps that we use, they are products that were built here in the Western world and then we use in Nigeria. And then I always thought about it that imagine flipping that situation where we have products that are built by us, by African companies, African founders, but these products are used globally. And yeah, this is something I've always been passionate about and something I've always thought about. And I just wonder if there's any other person who has ever thought about this, having African products being used globally. So you can just let me know in the comments if this is something that also excites you, like it does me. And moving on to the next slide. Sorry guys, pardon me, I'm using an AI tool. It said AI is going to take over the world, but this one is not working. Okay, so why global expansion matters. So a lot of companies want to go global, but not all companies should go global, and not all companies are at the stage where they should be going global. But before we even go into that, it's why should you even think about going global in the first place? It's when you go global, like just by the nature of it, you have increased total addressable markets. By the nature of expansion, it means you are reaching more people. You also have increased average revenue per user that you could get, especially when you go global. The purchasing power in a lot of Western countries is higher than what you have in Nigeria or in Africa. But even beyond that, it's also stronger trust signal. So I was working recently, I did a very short stint with a company in the remittance space that was building into Africa, Asia, and LATAM. And one of the reasons why they decided to expand out of Africa is because at the last raise, when they did their last fundraising round, they were able to raise a significant amount of money, but it was such a tough gig to do. And the reason is because of something called the Africa Premium, where when you go to raise as an African startup, there is this African premium that investors place on you. They think of Africa as exotic. A lot of investors don't understand Africa. And then when they want to invest, they either lower your valuation just because you might be doing the same thing as, for instance, doing the same thing as a Wise, but because your market is primarily in Africa, you will get a lower valuation than Wise would. So having international presence helps you to bridge that gap. It signals that you can compete not just locally, but also on a global stage. there's something I responded to a LinkedIn post recently where someone said focus, like when you want to go into international expansion, the dilemma is always between, should you focus on your existing markets where you're winning, or should you go broader? And that dilemma between focus and breadth is always an issue. And what I think about that is focus always matters. Focus matters. The company should remain disciplined, especially in the early stages. But as a fintech company, markets are evolving fast. A lot of competitors are coming. Regulators are shifting, right? Having breadth, so going broad, going global, is actually a form of insurance. So if anything happens, even in your core market, you know that, like for example, in the company I was working at here in the UK, if anything were to happen here in the UK, now they have the Irish market, they have the Spanish market, they have the Italian market. So their revenue is not solely dependent on one market, on the UK market. And even this premium, when you think about like going for VC rounds, the company I was working at in the UK, even though they already had 50% market share in the UK, when they expanded into the Irish market and the Italian market and the Spanish market, they were able to use that to secure a funding raise of over 400 million pounds, right? Using just the fact, of course, a lot of other things, but the fact that they were now present in not just the UK market, right, was a big booster in how they were able to, how the investors value the company. So I've said all of this to say global expansion is very important. It presents a lot of opportunities for companies, fintechs globally, and especially in Africa. Now, the next thing is, a question a lot of people ask me is, when is a company ready to expand, and should all companies expand? So that's when do you know that you are ready to go global? Like the first speaker said, a lot of company startups, they bite off more than they can chew. I like how he said it. They bite off more than they can chew, and then they choke. You don't want to. Expansion is expensive. Expansion is time intensive. It's resources intensive. It's capital intensive. You don't want to expand until you are ready to. So when would you know that a company is ready to go global? You need to have proven right to win in your home market. So you need to have proven your, what do they call it? Is it product market fit? You need to have product market fit. Why do people trust you? Why should anyone use your products in the market that is your focus market? You need to have proven that first. You need to have competitive advantage domestically before expanding. You need to have your focus markets. From my experience, again, the UK company I worked at, like I said, they already had over 50% market share, if not more, in the UK before they decided to expand.
Hi, Joy. It doesn't seem like the slide is changing.
Oh shit.
Yeah, I've been trying to call your attention. Sorry.
For some reason, I don't know why this AI tool is not working. Okay. It's better now.
Yeah, it's changing now. Yeah.
Yeah, thank you. All right. So I was saying, when are you ready to go global? It's first that you've proven the right to win in your home market. So you've demonstrated clear product market fit and competitive advantage domestically before expanding. And I was saying that the company I was working for here in the UK, before they decided to go into Ireland, Spain, and Italy, they already had over 50% market share. In the remittance company I mentioned I worked at, they already had their focus markets in some African countries before they decided to go into Asia and LATAM. So that's the first one. The second thing is, you need to have operational readiness. So do you have the right compliance setup in place, even in your current market? Do you have the right data management? Do you have the right internal controls in place before you decide to go global? Another one, which I find that a lot of people don't pay attention to, is, do you have the bandwidth, both from a leadership point of view and from a team point of view, to go global? Like I said, expansion is very time, resources intensive. For example, again, a remittance company to be thinking about, do you have the right treasury team in place? Because if you're going into multiple countries, you're going to be having to do with FX controls in multiple countries. So do you have that team set up to go global? Even from your CEO, is your CEO ready for what it takes to go global? Or do you have the right expansion teams in place to be able to take your company global? These are things that, again, money is important, which is like the last point. You need to have the money to fund expansion. But I find that a lot of companies don't actually pay attention to the bandwidth within the leadership and the team overall before they go global. And I've seen a company decide to shut down expansion just for that reason. Again, they bit more than they could chew. They started expansion. They wanted to do a number of countries in 1 year, but then they realized that the treasury team was suffering. They weren't winning, and it was affecting their existing markets because they didn't have the right team set up required to go global. I hope this slide is still working. Please let me know at any point if you lose me. Can you still hear me?
You see, yeah, we can hear you. We're saying, when are you ready to go global? Have you changed it?
No. That's the way I am. Okay. So that brings me to the next question I tend to get a lot, is, when you've decided that you are ready to go global, how do you decide where to go first? So now you have your product is working. Again, even with operational readiness, something I should mention is, when the company I worked at in the UK, when they decided they were going to go global, it took them almost 2 years to get to the point where they were actually ready to launch in a new market, because they built that technology in a way that everything was hard coded. So I don't know if they are technically inclined person. What that means is a lot of their code is, if you say, I'm going to use a very layman terms, A plus B equals to C. So they couldn't localize the code. So the first thing they had to do was actually update their entire technical build, their entire infrastructure to be scalable and dynamic before that's like the very first foundation, before they could actually build the product to go global. So these are all the things you need to consider to say, okay, am I actually ready to go global? Am I ready to go beyond my current market? So now, when you've decided that you want to go global and you want to go into other markets beyond your focus market, how do you choose the right markets to go into? And there are a couple of factors that any fintech should consider. The first one is the regulatory clarity. So how long will licensing take? Again, I think the first speaker also mentioned this. Licensing can take a long time. You need to use a scorecard to figure out which market will be the easiest for me to go into based on this criteria. For example, you might decide that you want to go into Australia first, but then if you find out that the licensing in Australia takes 3 years, or they have some criteria for you to go into Australia that you don't have, so you need to look into other markets. You need to look into partnerability. So it might be the case that you don't want to get your licenses first, but you want to partner with other local banks or aggregators in order to be in those markets. So you need to consider what markets would it be easy for me to find people to partner with, that or processors that will be open to collaboration. You need to think about customer demand. So you don't want to expand just for the sake of expanding. You want to expand into a market because you've seen that your product actually solves a problem in that market. You've seen that, for example, when I led the launch to Italy for the company in the UK, it was because they'd seen that in Italy, they had this mafia situation going on in acquiring, where there was this particular company that was dominating the market, but the company's product was shit. So if you think about like the Money Point POS system, for example, in Italy, what would happen is there was just this company that was dominating that POS systems. And when we went to Italy to do research, it turned out that the restaurants were complaining that at lunchtime, when they would be the busiest, the machine would just shut off. And they all had to deal with the fact that they couldn't accept payments at lunchtime. So we could see quite tangibly that there was a problem there that our products could solve. Again, we already had a right to win in the UK. We already knew the selling point of our products, and we could see that those selling points of our own products were things that would solve a pain point in the Italian market. So we didn't just decide to go into Italy. We also could tell that, okay, there's a pain point here. Another thing to consider is the competition. Are you going to be filling a gap or fighting incumbents? It could turn out that, okay, you decide to go into the market, but you can see that there are a lot of strongholds in that market, and it'll be more difficult for you to get even any traction in that market. So that's also something else to consider. You also need to consider operational feasibility. What are the compliance laws in that market? How easy is it to do KYC in that market? And of course, the economics. So what will margins look like after you consider forex, taxes, fees? These are all the things that recently, one of the things I had to do was choose the markets that a company should go into, should expand into. And these were things that played into a scorecard where you have this list of countries and then you rank them against these different criteria. And that would help you determine, okay, we should go into this fit. We have this phase one country, we should go into these countries first. And then maybe once we've succeeded in this market, we should go into this set of countries. One thing you don't want to do is decide, which is something I saw a company do recently, is that you want to go into, 20 countries in 6 months. You will burn out. Like, no matter how much money you have, no matter how much capital you've raised, you always have to be strategic about expansion. Each country has its own nuances and dynamics. So you have to actually calm down and decide which ones do you want to do first. And that brings me to the next topic, which is how do you decide where to launch? Actually, before I go into that, there's something I actually want to call out here. So again, in the company I was working at here in the UK, something actually happened. So we, again, like I said, we're really big in the UK. And then when we wanted to expand into Europe, expand globally, we went into Ireland first. Not because Ireland is the biggest market by any measure of it, but because the Irish market is the closest to the UK market in terms of regulation, in terms of customer behavior, in terms of customer needs. So that was the first market we went into first. And then after Ireland, we went into Spain first because it was easier for us to get a license that allowed us to passport into Spain. And then after Spain, we're actually supposed to go into France next. But we had to pause France because it turned out that France, the French market had 40 different business types that we need to address. And we didn't have the technology, we didn't have the capacity to be able to address the French market. And so we had to pivot and go into Italy. So these are just, again, things you have to consider when you're going into expansion. You might think, okay, I'm going into Europe. Europe is the same. I'm just going to Europe and going to 10 countries in Europe at once, which is what the company originally thought. But when you actually start going into this market, you see that there are a lot of nuances, both from a regulation point of view, from a customer behavior point of view, that you have to consider in deciding what markets you want to launch in. And that brings me to, again, the next point, which is, how do you choose where to launch? How do you choose how to launch? So again, the first speaker spoke on this a bit. There are different ways to launch in global markets. So even global, or even if you're expanding in Africa, there are always different ways to go about it. Either you go directly, that means you get your licensing, or you integrate directly with banks. I think in Nigeria, that would be a case of maybe integrating with NIBS. You integrate directly with the core payment systems in that country. Or you go the other way, where you do like partnerships. You go into those markets through partnerships and aggregator. And I don't think either one is good or bad. It just depends on the resources you have at the time. It also depends on how fast you want to expand. Again, using an example from my experience, the company I worked at that wanted to expand into 18 countries in 1 year, they decided to go the aggregator route because that's faster. You are leveraging existing infrastructure, you're leveraging existing relationships to go into those markets without significant upfront investment. But the strategy they used was they would go into all of these markets, and then when they discover which ones gain traction. So again, let's say you're going into India, Pakistan, Philippines, Brazil, Peru, and then you see that you're having traction in India and you're having traction in Philippines. What they would then do is they would then decide, okay, we want to go direct now into India because we've seen that there's traction there. So you start to get direct integrations into India. So these are two different ways you can decide to expand. So once you've picked the market you want to go into, the next is to decide, how do you actually want to go into that market? Do you want to launch through partners, or do you want to go direct? I call this the L1, L2 model. So the first model, which is through partners, is all about speed. So you are going to be using aggregators or existing rails to get live quickly. You're also trying to validate demand. Again, you can theorize as much as you want, which was the first point. You can have all of the scorecards done. You can have all of the metrics and all of that thing done. But sometimes until you get into a market, you don't actually know how that market is going to perform. And so that's why the aggregator model is great, because you can actually test a market without having to invest so much into getting licenses and integrating directly with the banks until you've validated demand. You can also learn from that market. And the second one, which is L2, is all about depth. So once you've validated a market, once you've started to gain traction in that market, you need to start building direct relationships with that market. You need to start thinking about, okay, maybe I want to now get my own licenses, because you will actually make more money when you go direct. So that's like the chicken and egg problem. When you go with aggregators will have their own premium. So again, think about like a remittance company. If you're going into Asia through an aggregator, their prices, their FX is not usually the best. When you go direct and you integrate directly with the banks in India, Pakistan, you actually get better rates. So you always have to choose, do I want to prioritize validating demand and going faster, or do I want to prioritize getting the money now and getting my own licenses and integrating directly? Again, it's not about being fancy. It's about sequencing. You decide what you want to do first. The remittance company I worked at just recently, we did 20 integrations into 10 markets in 1 quarter. And that speed was only possible because we went through aggregators. Now we have 10 markets, but the question is, are all those 10 markets, are they commercially viable? Of course not, because we integrated via aggregators. So again, their prices were terrible. For some of them, we had to subsidize prices to even get people to use our products. So we're actually loss-making on some of those markets. But we're able to validate, we're able to say, okay, which markets would we gain traction? Which market do we actually solve pain points in these markets? And then once we did that, we immediately started going direct and integrating directly with banks in those markets so we could get better prices. So this strategy was deliberate. We prioritized speed and validation first before going for depth. So these are 2 different ways you can decide how to launch a new market. It just depends on what are you prioritizing for at the time. And that brings me to, what are the top 3 big challenges of going global, of going into any market? And these are challenges that I have seen play out so many times. They are actually unavoidable. The first one is regulation and licensing, which is very obvious. When you are going into a new market, every market is different, but these 3 challenges show up everywhere. So regulation is not just about getting the license, it's also about maintaining one. Again, like I mentioned, we had to pivot from going into France to going into Italy. And to launch in Italy, we needed to get the Bank of Italy license. That took almost a year to get. Of course, we had to start building the product while we waited for the license. We set a launch date, but 2 weeks to the launch date, we had no license. The thing about growing global and these Western countries is, unlike Africa or Nigeria, where you could, you can go to the CBN to see if you can talk to some people. You can, make some calls or have some people that have leg and, try to get people to speed things up for you. For these Western countries, it doesn't matter who you are. If they've decided to be slow, they are going to be slow. It's whenever they decide to get back to you that they're going to get back to you. So that's why it's actually very important. If you decide that you want to go global, you need to start thinking about how you want to approach it. Are you going to be getting your licensing, or will you be going through a partner? If you decide that you want to get a licensing, you need to start, like, from the very second you think about going to a market, you need to start thinking about putting in the works to get your license, because it takes a lot of time. For example, I don't know how many people are familiar with Revolut here in the UK. Revolut is one of the biggest banks in the world. I think at this point, I said one of the biggest global banks, and they still don't have a full UK banking license, right? I don't know what has been going on there, but for years now, they still don't have a full banking license. And this is a big company, a billion-dollar company, and they still haven't been able to get a full UK banking license. So it just shows how complex regulation and licensing can be. Of course, they are still present in the UK and they are using partners. Again, they've decided in the UK, while they wait for license, they've been operational through partners, but they still don't have a full UK banking license. The next big challenge is usually infrastructure and interoperability. So if you are going to be integrating with local payment system banking networks, it isn't a plug and play. It's not a case where what you do for one market is going to be the same thing for one market. Like if you think about Europe and the UK, for example, in the UK, we have the faster payment system. In Europe, there's the IBAN system, there's the SEPA system. If I'm not missing that up, there's a SEPA system. So if you decide that you want to go into the UK and Ireland, you have to factor in those two different payment systems for integration. Another thing is trust. So this is a challenge, regardless of where you want to go into trust and localization. You want to establish brand credibility. When you launch into a new market, it's almost like you're starting a business from the scratch, because nobody knows you, nobody cares about you. So you need to think, why should people care that my brand exists in this market? Why should they use me over the brands that are built by the people in that country that they're already familiar with? Why should they be using my product over that product? You need to think about how you adapt your product to the local culture. There's one thing I found here that people don't like is, if you're a UK company and you're trying to sell something in Spanish, they don't want to feel like the UK company is trying to sell something to them. One of the reasons why the company I work for has succeeded over some of their competitors who have been in Spain and Italy for years is because they localized. So when you see the products in Italy, you actually wouldn't know that it's a UK company that's trying to sell to an Italian company. You have to localize it so it looks like, okay, this product is for us, it's by one of us. So that's something that's very important. You also need to customize your product, of course, to meet the regional preferences and behaviors. In Italy, I'm just going to give a funny example. Italy is a very funny market because of again, hope this call is not being recorded. There's like a kind of mafia situation going on in Italy. And as a result, their government is very, very strict. So if you get any payments in Italy, as you are being sent your invoice, or think about your your pay slip, is also automatically supposed to be getting sent to the government. So the government should always have a record of every payment that happens, every invoice, every pay slip that happens in Italy. So if you want to build an Italian market, you need to factor this in. You need to factor in, they call it e-invoicing, where everything is being reported directly to the government. So this is something that if I'm being honest, we did not fully factor in how difficult this was going to be to build for, and that delayed our launch into Italy. So these are challenges that come in when you want to expand to a new market. Of course, there's regulation and licensing, there's infrastructure, but you actually have to think about the different regional nuances that you're going to have to accommodate for. And that brings me to the next one. So this is a two-part. How can African companies actually prepare to go global? Again, if I go back to how I started, where I said a lot of the products that we use in Africa are built from the West, and a dream of mine I really want to see in my lifetime. I want to see products that are built in Nigeria, that are built in Africa, being used by people in the US, and not just people in the diaspora. So the same way we use Uber, the same way we use Facebook, I want to see products that have been built by us being used globally as well. And how do we actually start to build products that get us there? How can we prepare to get there? And I think the first thing is to build with compliance in mind. So no matter what, as you're a fintech company, you have to think about how do I build my product? How do I ensure that my product is compliant? Not just for the not just for the markets that you are building in, but even globally. So you need to start embedding compliance into your culture. So document what your KYC processes are. What are the escalation flows that you have? Make sure that your processes are audit ready. So if you are deciding that if you're a Nigerian company and you want to go into the UK, you have all of these that you can present to say, these are all the customers that we have right now. These are all the KYC checks we've done on our customers. These are all the transaction screening that we do. And we are going to be replicating this in the UK. So it's going to be easier for you to go to launch into like a UK or a US when you already have these systems in place. The next is you need to actually start to build an investor ready story, because one thing investors will always ask you is why, if you're already succeeding in Nigeria, if you're already succeeding in any country in Africa, they're going to ask, okay, so why do you want to go into the UK? Who do you know in the UK? Why the UK? Why the US? So you need to have a story that demonstrates, you need to have a compelling narrative that demonstrates your expansion strategy, the market opportunity that is in that market that you decided. Going back to again, when you do the scorecards to say, okay, this is the market I want to go into, you need to form that into a story that you tell your investors, of not just your investors, actually your customers. Because if your customers are predominantly in Nigeria and they start to see that, okay, you're also going to the UK, they also want to know, okay, why is this company I'm why are they going into the UK? So you need to have a story that you're telling. You need to also have like a path to profitability of, okay, if I go into this market, this is the traction I'm expecting. These are the clear metrics I'm expecting. Because again, you will face that African premium of, okay, an African brand, you're an African company. Why do you want to come and sell in the UK? So you need to be able to counter it with proof, to show your governance, to show your transparent pricing, to show the traction you're expecting. And the third one is for you to start to build partnerships before you need them. I think this is something that a Nigerian brand, again, I've never worked with them, so I might be speaking out of my ass. I think this is something Money Point did, if it were like when they were coming to the UK. And even when they came to the UK, before they fully launched the Money World app, they were building partnerships. They were speaking to regulators, to processors here in the UK. So it's not the case where you want to launch in the UK or in the US, by the end of or Q1 next year, and then you start the process at the end in Q4 this year. You need to have started from the start of the year. You need to start thinking about who are the partners and who are the people I'm going to be partnering with, who are the processors I want to work with. You need to start building those relationships with them so that when it's time for you to launch, it's not like you're a strange company or a foreign company just trying to launch in that market. You already have some credibility in the market. So that's the first thing. You need to strengthen, the third thing rather, you need to strengthen global partnerships early. And then the next thing, how can African companies prepare? And I think this is something that the previous speaker spoke on that I want to really go deeper into, is you actually need to invest in local champions. So far, in all the companies I've done expansion for, there is none that have succeeded. In fact, the markets that we've not succeeded at are markets that we didn't have local champions in place. You need to hire and empower local leaders in that market. Again, going back to the point I made about, you want the products to feel like, if you're building, you want it to feel like a British product, you want it to feel like an Italian product. And you as a Nigerian, you can't do that until you have people on ground who actually know that market. So you need people who understand the market, who understand the culture in the market, who understand the regulatory environment, right? They will be your eyes and ears and voice on the ground. Again, going back to the Italian example, when we're going to launch in Italy, the company I was working at with partnered with McKinsey. So of course we had all the numbers and all the graphs and all the presentations, but McKinsey is not going to tell you that there's a mafia situation going on in Italy. It's when we hired a general manager in Italy who of course had been working in the Italian market for years, who was like almost like a baba area boy in Italy. That was how we were able to figure out, okay, this is actually what is going on and this is how we can position ourselves to go into that market. So local expertise is going to help you to even accelerate trust building in that market and help you to navigate all the nuances that no matter how many books you read or how many consultants you consult, that they will never be able to tell you. So investing in local champions is so important. Even if you are expanding, even within Africa, like again, I mentioned, I recently did a bit of African and Asian launch. In all the African markets we're going into, we had local champions in the francophone countries, in the Asian country. We had people on the ground who were serving as general managers or country managers that knew that market thoroughly. And then the next thing is you need to focus on repeatability. Again, you need to be documenting your process. If your goal is to go global, and by this you mean going beyond just one market, so you want to go into the UK, you want to go into the US, you want to go into multiple markets, you can't, every time you want to go into a new market, you can't be starting from scratch. You need to have playbooks. You need to know that, okay, while each market will have its nuances that you are going to have to accommodate, you need to have, first, your technology needs to have been built to be scalable such that you are not building everything from scratch. You are just making adaptations to go into those markets. Your compliance checklist, your market research templates, you need to have documented all of those things as to make it faster for you to go into for you to go into multiple countries. And again, global expansion is not just about planting flags on the map. It's actually about the system that you build that will make each country easier. When we launched in Ireland, it was a production. It took almost several months, almost a year to go into Ireland. But by the time we'll be doing Spain, it took only about 6 months to do Spain. And by the time we'll be doing Italy, because of all of the different nuances for the Italian market, it took 4 to 5 months from when we actually started the build. Of course, a lot of things went in place, but from when we actually started the build to life, it took just 4 to 5 months. Each time it took less time, and that's because for each we're documenting the processes, we're having playbooks so that for the next market we're just repeating them. The company decided to pause launching in new markets for a while, but if they were able to pick it up, hopefully from next year, when they want to go into France and Belgium and the other markets that they have slated on their list, it will be faster for them to do those because again they already have the playbooks in place to do those. And that brings me to the long game. If there's anything you take away from this, it's expansion is not, it's not that I want to launch in 1 million markets next year and I'm just going to, take my products there. It's a long game. Expansion is compounding. Like again, I talk about wealth. You think about like compound interest. Each market you build each market you enter will build your capabilities and credibility that will make the next one easier. It's also a long game. You can't expect that you launch in global markets and then you start to get the profits from it immediately. You are building the foundations first. So all those investments that you're going to make in compliance, in partnerships, and infrastructure, those are things that you won't start getting money from, like maybe in your first year, maybe not even your first 2 years, right? But you need to think the long-term play. Like these are things that will pay dividends in years to come. And again, African resilience, I like to say that building, even as a product manager, like working in Nigeria stressed me way more than working in any of these countries here in the UK. So we already have that resilience. Like we're already dealing with very tough times building as African companies, building in Nigeria. So if we're able to take that resilience and that adaptability and build with the global discipline in mind, I do think it is very possible for us to have African products that also use globally. But just again, expansion is a long-term play. It takes a while. Something I've seen another company that I contracted with do is they expected that we're going to go into this market and immediately start to gain the profits from that market immediately. And it never works like that. But what happens is when you have that expectation is that you burn out because you are doing all of this work and you expect to start seeing the profits. And when you don't, you burn out and say, okay, maybe this expansion is not worth it. But when you already, from the very beginning, when you already have the mindset that, okay, this is going to take a long time for me to start benefiting from the rewards, then you'll be able to play the longer term play. And that's it from me. I think, again, global expansion will reward those who combine African resilience with global discipline. We already have what it takes. Again, we already have that hustle culture. We already have that hustle mindset. In building in Nigeria, I remember when I was working for one company, we woke up one morning and CBN had, released a statement that meant the product we're building was nonsense. So we already have that hustle mindset. We already have adapting to a whole lot building in Africa. So we have what it takes. We just need to combine that with having the right expansion strategy, and global expansion should be possible. Thank you.
Wow. Wow. I have no more words, but this is a lot. Can we give some applause to Joy? Let's have it. The African in me is pleased. The resilience and all of those things. Thank you so much. Thanks, Joy, for pouring your knowledge into us. This was really insightful. I'm sure that there are so many questions at this time. I know Iyanu already had a hand raised, so we'll just be wrapping up by having like a general Q&A. So if there's any question you have, if you want to ask a question, just raise up your hand, or if you prefer to put it in the chat, that's also fine. Thanks a lot, Joy. So Joy is still here. I know Gabriel had to leave, so Joy would answer some of our questions. So Iyanu, you can go. Any other person that has a question can just raise up their hands, and we'll wrap this up in a few minutes. Yeah, Iyanu, are you still here?
Yes, I am. Thank you very much. Thank you, Joy. That was an excellent session. And thank you, Gabriel. I've learned so much. So to get quickly to the point, so I work with a remittance as a service startup. We're a fintech brand, and we're also currently in the process of expanding. We're looking at African expansions, yes, and also looking at the same time looking at expansions into key areas in the US and Canada. So I wanted to ask for your objective take for a lending solution. We know that Nigeria is tier one, but Nigeria is currently, I would say, as matured or is not underserved in any way. So what would you say should be major criteria for looking at countries in Africa that would benefit from a lending as a service solution that is not, that has key differences from what you get from Lend Square, Branch, and all the other B2C and B2B providers. So what should be priority in terms of creating a scorecard for expanding into key areas in Africa for that expansion? And then when you're looking at taking an African startup to the UK, to the US, to Canada, what do you think should also be the biggest factor? Because it's not, for licensing is not really a problem on our side, but it's also not in partnerships because we're leveraging our own licensing, so we don't necessarily have that challenge. But what would you say should be the biggest one, especially for someone that is asking from a marketing perspective? How would you figure out the most lucrative market that also comes with the least barrier or competitive entry?
Okay. Caveat, I don't have experience in lending, so anything I say might be quite generic. For the African markets, I think even generally, you just have to do the research to figure out which markets will benefit the most from lending. So think about from your current market, which is Nigeria. Why has your product, I don't know what company you work for, but why has your product succeeded in Nigeria? What are the main things? What are the unique selling points of your own product versus the other lending products in Nigeria? And then when you think about those unique selling points, you need to think about what countries either in Africa or abroad will benefit from those selling points. Again, like I said, the company I was working for in the UK, the main selling points for them was they had like a very fancy POS system. They were very fast reconciliation. What was the other thing? Instant payment. So some markets in Europe don't really value that. When you think about Germany, for example, Germany is still a bit cash heavy. Germans don't mind. They're very bureaucratic. They don't mind their payments come 1 week later. So they don't value what that company had. So that's why Germany was marked as a phase 3 market if we're going to use Germany, if we're going to go into Germany. But markets like Spain or Italy were markets we saw that would actually value what we'd already succeeded at in our core markets. One thing you don't want to do is, especially if you're new to expansion, you don't want to change your entire company ethos, your entire company philosophy because you're going into new markets. So you should always select markets that will benefit from what you as a company already succeed at. So if as a lender, what again, I don't know so much about lending, but if as a lender, what you succeed at is you have good rates, or you have customer empathy in mind, or your how you collect your loans back. You have like a system in place for how you check credit worthiness, right? You need to look for other countries that would actually value that. If you're also, again, I can speak more to the European market. If you're going to the European market, you need to also think about, they already have a lot of systems for loan. They have like the credit scores, they have the credit bureaus. So if you're actually a lending product and you're trying to go into US and Canada, you need to be thinking about how do you integrate with like the likes of Equifax? How do you integrate with the likes of TransUnion? Because it's actually, I think it's a bit easier to do lending abroad than to do in Nigeria, because you actually have transparent credit worthiness. So once you factored in what countries would benefit from what you are great at, the next thing is to actually start integrating with those credit bureaus. And I think you'd said something about lucrative. Again, which ones will be the most lucrative? The markets that will be the most lucrative will be the markets that you can provide the most value to. So if you are going into a country in Europe, for example, or in Canada, where you can see that their lenders charge maybe 10%, and your product, you've found out a way that you can do 5%, or there's an issue with their lending that your product can solve, you would make a lot. Again, when you provide value, you make money from providing value. So you would make a lot of money from that. Another thing to also factor in is the economics. So is it a case where you need to think about the partners, that the integrations you are going to need to do to launch in those markets? How much would they cost you? Again, lucrative markets, revenue is cost minus Yeah, is it revenue minus profit that's costs? You need to, anyways, you need to factor in your revenue, and you need to factor in your cost. Yeah, revenue minus cost equals profit. So you need to factor in your costs, right, to be able to determine also if the market will be liquid. I hope I was able to answer your question, Yanu. Again, I'm not too versed in lending, so I hope that helped.
Yeah, thank you.
Thanks. We have a few more questions. Guys, before we continue to take the questions, please, I just dropped the link in the chat. We've been saying this was insightful, this was great. We want to hear it on Twitter. Please help our social media presence ministry. So you can just like leave that on Twitter, say thank you or whatever you want to say to the speakers. They're also tagged in the tweet. So I just dropped the link and I'm going to pin it now. So please let's engage. Any word is fine. 1 word, 2 words, 1 sentence. Just engage. Thank you very much. So we have another question here from Tosin. Hi Tosin. Do you want me to read it or you want to engage Joy? But she's asking around someone coming from a retention or fintech background, what do they need to learn to like move to expansion? But Tosin, you can maybe buttress that briefly, if you don't mind.
Hi, can you hear me?
Yeah, I can hear you.
Hi, Elizabeth. Hi, everyone. Thank you so much, Elizabeth and team, for this wonderful session and organizing this. And thank you so much, Joy. This was such an insightful session. So one of the reasons I signed up for it was literally, around, the career path for me too. So I have actually been looking into, at this stage, I've been looking into, and I could say sort of like I'll not say change, but just moving into other areas, right, within the product space, and that's what piqued my interest why I signed up. So yeah, the question is, currently, of course, I work in the product space, but majorly around retention, acquisition, like what they call a growth product manager, I guess. And for this, I also know that you are within that fintech space. So what led to you moving to this part of to this basically to this career path? So what led to you getting that, right? So was it that within an organization you were hired as a product manager and then at some point you were moved into that team or some sort of something of sorts? Yeah, that's my question. I hope it's clear. What do I need to explain?
No, it's clear. That's a very good question.
Thank you.
Before I answer, when you say moving into expansion, do you mean moving in Nigeria or moving abroad into expansion?
No, just generally. I know that when you were in Nigeria, you were not necessarily within this space, right? So when you moved out of the country, right? I don't know what the path was for you, but I would say majorly just generally, not just Nigeria, but generally, yes, moving within that career path. Like, okay, I'm a product manager, but then I find myself working on expansion projects, right? They are not all organizations or not all companies that you work in necessarily want to expand, right? But how do I find myself, basically pushing I'll say an expertise within the field?
So I fell into expansion. That's the long answer. I didn't do anything special to get into expansion. But what I would say is, I think for any career pivots, you need a lot of audacity. You need a lot of audacity. You need to a bit to position yourself. So when I moved to the UK, the first company I worked at, I was working as a regular product manager. In fact, I was first a product owner before I became a product manager there. And because the company was a B2B company and we were building products that was being used by the stock, so it was an investment banking startup. One of our products, this stock exchange, South African stock exchange, was one of our customers. We were using the products that we're building. We also had stock exchanges in Asia, Nomura, using our products. We had some stock exchanges in Australia using our products. So honestly, I didn't even think about it as expansion. It was just regular product management. Those were just our customers. And then when I wanted to leave that company, I'd seen a role that was product manager expansion. That was the title of the role. And that was a company I wanted to work for and a role I really wanted to do. And just felt like what they were saying were things I'll be able to do. And so I applied for that role. And again, in the interviews, I just branded myself as, first, I'd worked in Nigeria, I'd built for the African market. So that alone is global experience. I made sure I put my experience in Nigeria as that. I also positioned the experience I had in the investment banking company as how I'd built for Asia. I didn't position it as I was just doing product management. I positioned it as I was building for Asia, I was building for South Africa, and I was building for Australia. So that was how I positioned it and how I was able to get that particular role. That was like the first role I would get that was branded as expansion. And of course, within that role, I was
Interesting.
with a team that led the launch to Italy, Ireland, and Spain. And I just spoke about it on LinkedIn, and that's how I've gotten all the other gigs I've done in expansion. I've just mostly been people reaching out for me to work with them on expansion.
Interesting. Thank you.
All right, thanks, Joy. We'll take one more question. Before the question, you already know what I'm about to say. Please drop your thank yous. This session is a free session. We like do not charge for it. So this is just the way of you also giving your appreciation, right, to the speakers. So say thank you to the speakers in the tweet. Say thank you to BIF. Thank you to yourself for attending. But yeah, we have one more question actually from Nnamdi, and that will be our last question for today. So Nnamdi is asking, in your experience so far, what areas can one explore around fintech in Nigeria, as many people are focusing on remittance and collections? This question is deep. Joy, do you want to take that?
What do you mean? So do you mean other fintech ideas that you can do in Nigeria?
Yeah, so Nnamdi is saying people are focusing on remittance and collections, but there has to be more to fintech. So what other areas can be explored in for the Nigerian space? Yeah.
I don't know. I don't know. But again, so when I was at I think the previous speaker had actually spoken about this. I think there's a lot of opportunity in stable coins. Again, I'm building for that. Again, maybe it ties back a bit to remittance. But again, remittance is a big thing because it's not a problem that has been solved. Right now, most of the remittance companies are building for Nigerians in UK sending money back home, Nigerians in sending money back home. While we're thinking about people in Nigeria actually sending money out, I don't necessarily think that's a problem that has been solved. And I think that's something stable coins can. So my research when I did my master's, my research at London School of Economics actually focused on the use of cryptocurrency and stable coins in Nigeria for Nigerian merchants paying to Chinese suppliers. And I did a case study. I actually came to Nigeria and I interviewed some merchants in Computer Village in Nigeria. And a number of these merchants are paying millions of naira every day, and they are doing it through cryptocurrency. They don't even know that it's cryptocurrency because there's a whole network of brokers and middlemen doing it. But the technology actually powering how they are paying their suppliers in China, when you actually trace it and you investigate, is actually through stable coins. And everything there is manual. It's just the merchant send money to one person converts it to this thing, this person sends it to one person. The Chinese suppliers refuse to accept crypto. So there's also another group of people in China that accept the crypto and converts it to one before sending it to the Chinese supplier. So all of this is happening. This is millions, if not billions of naira being transacted, and it's all happening manually via different third parties. So that is an opportunity, I think, that I don't know anybody necessarily. I think there are a few crypto companies that are doing it already, but I think that's a potential opportunity in Nigeria. If I were to build something in Nigeria right now, that might be something I would focus on.
Oh, cool. Thanks a lot, Joy. Lawal is saying he's building something around this. So
Come
kudos.
and hire me, Lawal.
Lawal, over to you. You've heard from the horse's mouth. Thank you so much, Joy. We appreciate the time you've spent with us. I know you're supposed to be resting this Saturday, or just having fun, right? TGIS. Thank God it's Saturday. But thanks a lot for spending the time with us. We'll be closing this. I would like to take over the screen, Joy, if you don't mind. Just a little about BIF. For those that are just joining, we've talked about Builders in Fintech. Builders in Fintech is the hub for anything fintech in Africa. I mean, we'd expand soon, but right now we're focused on building the knowledge gap for operators and builders doing fintech products in Africa, right? We have a community, so if you do not yet belong to our community, it's exclusive, but it's open. Okay, that sounds contradictory. It's open to all, meaning you can apply to join, but like there is a screening process, but it's not that deep, trust me. We just want to ensure that the right people are coming into the space. So just apply. Betsy, please help me drop the link so anyone interested can apply or join the community, basically. Also, we have interesting things we do, and there are a lot of things that are exclusive to community members. For example, we have a scholarship that we're currently giving away for a fintech product management course organized by Trefford, and that's only open to BIF community members. So you need to be there. We also have insightful conversations within the community. Also, we have a newsletter, right? We said that one of the things we are doing at Builders and Fintech is to bridge knowledge gaps. So we're very, very big on sharing resources, sharing insights. So our newsletter is one way that we do that. So subscribe, and you only get to get a mail monthly. So we're not going to spam you or anything. So if you're not subscribed, please subscribe. Betty will drop the link to Substack, our Substack newsletter in the channel. I keep saying channel. Today is Saturday, Elizabeth. Come back so you can subscribe. Also, some people have asked, oh, will this be recorded? Is it recorded? How will they get the recording? We have a YouTube channel. And on our YouTube channel, we post recordings of our sessions. So if you want to know when we are posting this session, go and subscribe. Just search, head over to YouTube, search Builders in Fintech. Betty, you can also drop the link and just click directly so that you can subscribe. We already have videos uploaded there. So if you're just maybe during your weekend, you can actually binge watch some of these things. If you're interested in understanding payments, other things, right, around fintech. So do well to subscribe. Yeah, join us. Follow us on Instagram, LinkedIn, Twitter. Stay updated. We have so much more in store. Next month, we're going to close the year with a bang. And our master classes, by the way, are held monthly. We held last month, the previous month, and we're going to have another one next month as well. So follow us on our social platforms to stay updated on all of these things. Have I missed anything? I'm not sure. Yeah, lastly, yes, I missed something. Please, we know that you enjoyed this session. We've been seeing the feedback. In fact, I've gotten messages from people saying this was insightful. Tell me, tell us, but also put it online. Let the world see that we are eating good. So I dropped the link earlier. Betsy can also help me with share. So we have a tweet up. Just engage, and yeah, that'll be it. So thanks a lot. I would say thank you to everyone for joining. I mean, you took your Saturday time when you're supposed to be resting or doing something fun. You're here to learn, and that's very amazing. Thank you so much for joining. We hope to see you in our next sessions. Bye, everyone. Bye. Thank you, Joy. Thank you, everyone. Bye.
Thank you. Bye.